it's evident for us that regulation is very incipient in a very formative phase right now, and it's shaped by the very fast evolution of blockchain technology. And we find ourselves in a landscape of varying and, most of the time inconsistent approaches in terms of regulation. We find regulatory gaps. And today I am delighted to welcome this rockstar panel to discuss how we navigate that and how the landscape is evolving. How do we build trust and how we increase credibility in the LT? So I want to ask the panel to introduce themselves. Elsa, do you want to
Sure.
start?
Hi. Hello, everyone. My name is Elsa Madrol. I'm Chief Revenue Officer for a company called VaspNet. VaspNet is a data company. It is an assured source of regulatory reference data. In short, that means if you want to look up Binance in Canada and see if they're regulated, we will come up with that data immediately, and we source data from all sorts of different companies. My background is very much traditional finance. I spent 20 years in capital markets before making the move to blockchain, various companies 4 years ago.
Erica.
Hi, I'm Erica Stanford. I started and run a crypto community, the Crypto Curry Club. I'm author of a book about the biggest hacks and scams in crypto called Crypto Wars, Fake Deaths, Missing Billions and Industry Disruption, and currently working on book 2, which means spending lots of times at police HQs and crypto analytics companies showing me lots of cool, scary stuff that's going on, and work at a law firm, CMS, and lots of crypto and fintech related work.
Shelley.
Hi, I'm Shelley Schechter-Kalm. I've just left my most recent posting as Chief Compliance Officer for a major crypto exchange. That's my 3 in 3 years. So I've been in crypto for 21 years, but that's crypto years, which are like dog years. So it's actually 3 years, but every day is like a week and we don't do weekends. So it is like, okay, prior to that, I was with Pay.UK, the UK Payments Authority. And before that, EY, HSBC, suited and booted. I'm in this space now and delighted to be sharing the platform with these legends.
Thank you. I also want to thank Emily Harris from TRM Labs. Emily was going to be with us, but coming back to London, the flight was cancelled, so she can be with us today. We'll try to cover the best we can the topics that she was going to cover. So to start with, we spoke about setting the scene. We wanted to talk about what does it mean. There's a lot of definitions, a lot of new words, a lot of concepts, and we wanted to start by setting the scene and talking about those before we start talking about regulation for precisely those realities. Elsa?
Yeah, and there's a specific reason for that. I was in Japan at a financial action task force meeting, and I posted something on LinkedIn, and one of my former colleagues at JP Morgan, a very senior man, and I got in a spat on LinkedIn because he was basically saying crypto is evil and blanketing crypto in one word. And I said, we've got to define what we're talking about here. So distributed ledger technology, we've introduced the panel with regulating DLT. That's actually a hot topic. Is it the technology that you're regulating, or is it the actors? Is it these new types of assets? So that's an ongoing debate, not one that we're going to tackle here, but just keep that in mind that it's not necessarily the DLT itself that you're regulating. Blockchain is a specific implementation of DLT, so not all DLTs are blockchains. For the purpose of this conference, we are going to refer interchangeably to DLT and blockchain because we're not getting that technical, as an alternative set of payment rails, right, that can be used to move money instead of traditional banking rails. We're kind of leveling that scene. Digital assets, so we can all agree, digital store of value that's recorded on a cryptographically secured distributed ledger or a blockchain. Cryptocurrency, the obvious example. I think it becomes interesting when you get into the topic of tokenization. So most banks, buy side, I used to cover the buy side, spoke to them at length about crypto and DLT. Not interested in cryptocurrencies in the least, very interested in tokenization, right? So what is tokenization? Tokenization is basically placing anything, any asset, any equity, any fund, service on a blockchain and representing it cryptographically. You can divide it as fungible, which is divisible and exchangeable, or non-fungible, where you get into things like NFTs. And so keeping in mind that banks and asset managers and the buy side generally are very, very actively looking at this because it has the power to transform their business model without trading Dogecoin or even Bitcoin.
Yeah.
So that's one thing I wanted to highlight. Advantages obviously include increased liquidity, transparency, but it really is on a case by case basis, right? Just because you can tokenize one of your assets doesn't mean that you should tokenize it. You really have to look at the benefits, the costs, because there are costs involved, right? You enter a whole new set of regulation if you're going to get into crypto, and make that informed decision.
Shelley, do you want to add anything else in terms of definitions? Or Erica?
Yeah, just be careful with your definitions because you can end up sounding really smart or sounding really dumb in one sentence. So if you start off with the title is digital assets, be very careful when you then narrow it down and just be sure about what you're saying. And be open and share out there that what you might call a token, someone might call an altcoin, or there is alternative language for what you can call an altcoin, or someone may be calling it an NFT that has some inherent value that we wrapped it up with some digital art, but we can trade it just like cash. So be really careful about your definitions, and you set the definition. Don't wait for anyone to do it for you because our regulators haven't quite agreed on what things are, so we can set that scene for them.
Yeah.
And
thank
I think it's just worth adding that there's crypto and crypto and crypto and crypto. And like
Yeah.
Elsa, I often get all of those Bitcoin things, they're all a Ponzi scheme, aren't they? Or
Yeah.
whatever. And, there's Bitcoin and certain crypto assets that are, good and have purpose and value and good technology. And then there's 20-ish thousand others that are basically jokes and there for the sake of either enriching their creator or for the sake of a joke or somewhere between a lost cause and a scam or utterly hopeless and sort of best avoided. And then you've got a few new projects in between, and then you've got some sort of asset-backed things, and then you've got governments trying to launch their own to basically control populations, and they're just totally bad. So there's lots of different things here, and I'd say most people tend to tar things with one brush, which isn't
Yeah.
necessarily accurate.
Yeah, but that's a great segue for something we agreed we want to talk about, which is the elephant in the room and the evil concept, Elsa, as you just referred, and which is we acknowledge that digital assets payment trails will be utilized for illicit funds like cash and like all payment trails. So what I wanted to ask now, and we can start, Erica, because you picked on that point now, is what are the real risks of using digital assets? And what are the controls and what are the systems that we should utilize to mitigate those risks?
Sure. So in crypto and digital assets, there's lots of risks. I wrote a book about it. Please buy it and read it and leave 5-star review. But no, there's there's loads of risks. Partly they're massively volatile. So price goes up, price goes down for every person who makes lots of money. Lots of people lose lots of money. They're massively manipulated. So there's risks there. They're prone to being hacked. North Korean state-sponsored groups are notoriously the best hackers in the world. They've developed but they basically take the best guys out of primary school, put them into special school, put the best ones from there into special, basically, computer school, which is how to hack, give them the best state-of-the-art equipment, and send them around the world. And that funds about half of the North Korean regime. So there's no government around the world and limited cybersecurity that can keep up with the skill and the expertise of North Korean hackers. So there's huge amounts of risks on that side, and you've got an industry that is doing really well at building better custody solutions and better cybersecurity solutions and better laws and stuff to protect things. You've now got digital asset insurance, but there is a huge inherent risk. And then other risks are not all platforms are good. There's crypto platforms and crypto platforms. Some go out of their way to actually look after the assets they're protecting and work with lawyers and regulators and have insurance and have safe custody and do things in a good way. And then others are less good, so that there's a huge inherent risk to that. So it's an inherently risky industry. But going to your question, a lot of crypto is tarred with the oh, it's all used to buy drugs or it's all used to evade sanctions. So in the early days of crypto, about 30% of Bitcoin transactions were used to buy drugs on the dark net. Now all sources agree that it's less than 1%. Some think it's about 0.15% of crypto transactions. Some say it's about 1% of crypto transactions. Compared to fiat, that's super, super, super low. So there's a few factors there. Crypto is much easier to trace. Everyone in forensics or in law enforcement are grateful when they've got a case that's crypto because it's easier to track crypto than any other asset. And in terms of evading sanctions or being used to fund terrorism, crypto is really, really difficult to cash out illegally.
Yeah.
The liquidity and practically it's very, very hard to cash out. So even if someone's able to steal hundreds of millions of crypto, they often can't cash it out. So that's a huge factor. So some of the statistics, for example, sending money to Russia since the invasion, people are worried, oh, it's all crypto that's used to evade sanctions. So since the Russian invasion of Ukraine, about $5 million in crypto has gone through to Russian forces, versus, I forget the number of fiat money, but it's thousands of times that. And $200 million of crypto donations have gone to Ukraine. So crypto as a percentage, I did the calculation once, it was like 0.00016% or something of the amount of fiat money that is used to evade sanctions.
Elsa?
I think it depends on what you're using digital assets for. Are you accepting or sending payments? Are you just using it in your treasury as a diversification element? I've heard of that happening. Are you incentivizing your employees with some kind of digital asset? So how a business is using crypto is going to determine the type of risk that it's facing. So yeah, there are operational risks. You've discussed at length AML CFT risks. Regulation is absolutely looking to affect that. The FATF meeting that I mentioned in Tokyo, they've issued recommendations on AML CFT. Every country is supposed to implement regulation. This is what MiCA is. This is what's happening across the globe. As this happens, we're going to define who is a virtual asset service provider or who is a CASP in the EU, and what their obligations are. And it starts with the travel rule. It ends with having to demonstrate a risk-based approach. Shelley will tell you a lot more about that. But it means having a blockchain analytics firm on the books. There are a whole host of tools that are being developed right now to mitigate all of those risks. And then, of course, there's volatility risk, yeah, as you've mentioned. So I think the key is really just to understand what regulation is going to mitigate the risks, and then find the right service providers and the right tools to mitigate those risks.
Shelley, do you want to add anything?
Yeah, in particular on the volatility point, I mean that is a matter of perspective. If you're in Turkey and you're invested in Turkish lira, like 85% inflation this year, Bitcoin looks pretty stable in comparison. So everything's about context, and I do think there is an enormous risk around regulation, not getting it right, having accidental loopholes or obstacles to innovation is the industry risk. And the career risk for everyone in the room is if you don't get this stuff, this is not niche. This is, it used to be TradFi and NewFi. It's just Fi. And this is the inflection year. So, welcome aboard. Yeah.
So one of the things we wanted to discuss today is how do we build trust and how do we increase the credibility. So what would be the factors that you think, when we spoke about regulation, so the first one is, do we think regulation will contribute to that? And it was our principle to say yes. But what are other factors and other things that you can add? And mostly from experience and from practical examples, as we discussed, that who is listening to us does not know and is not aware. So what can you add, Shelley? Can you start?
Sure. So, to give you a little bit of context, right up until 2021, the only sort of regulations that crypto firms were even starting to think about was AML stuff. And you had to comply with the MLRs here in the UK, the application process. You could fill out the form, pop it in, and the first couple of people who got their crypto asset registrations done did not have to do the sort of fully regulated, it's like a mini MiFID application today to get a registration with the FCA. But it's critical. I mean, that this is the year of full suites of regulation coming out. We have Abu Dhabi and Dubai, who appear to be right ahead of the pack, leading the pack, but they're doing it in a jurisdiction which creates incredible regulation and has quite a weak track record for enforcement. So whether you get a license there and that permits you the banking rails, which are faster, cheaper, and you're going to sleep better at night. I don't know whether those jurisdictions are going to be the driver for those banking rails, but a great place to start. And the rest of the world is catching up. The FCA is trying to get its act together and has made positive progress. And Mika, I don't know, what do we... It's like not just the terminology. We don't even know, is it Mika? Okay, Mika is... it's great. It's a framework regime, and we will see that being chewed over, tried and tested, and it's the first iteration of many. So there is this full-scale regulation coming our way. We should all be preparing for it. And most important thing is make sure who you deal with in the centralized economy is regulated, or at least has some hallmark of credibility. And in the decentralized space, make sure you're comfortable and that matches your risk appetite and you understand enough about the zero trust, zero proof. What's that actually going to mean if you seek to enforce a contract?
Erica?
I think what I'd add, who has used crypto, or at least used crypto sort of in the early years, just to get a vague idea of... Okay. I mean, go early-ish. Okay, fine. That's just. So it looks like half of people. So using crypto, the user experience, at least earlier on, was hideous, and is now slightly less hideous, and is getting to the point that it's almost usable. But you know, crypto hasn't been easy, and one of the factors of it is people would lose their private keys, and then one option is you keep crypto on a centralized institution, and lots of those have proven that isn't necessarily guaranteed a trustworthy way, because some of them have stolen funds or collapsed, or people have been responsible for private keys and then lost them or forgotten what they did with them or whatever, and lost all their money, or they sent crypto to the wrong address, or made a mistake, and then it's not been a process where one can just call the crypto platform and go, I'm so sorry, I just made a mistake, can you please refund me my money? It doesn't work like that. So there's been a lot of issues with the user experience of crypto, which haven't made it user friendly at all. And that has caused problems. Lots of people have lost a lot of money. And I think one of the main things that will come and companies like BBNK are helping with the user experience is getting better. And you've now got crypto naming platforms where it will be like not just sending money to a long, difficult code. You could get Erica.eth or Bob. Whatever. So there's this whole change coming in the user experience, and I'm absolutely sure that within the next couple of years, it will be like we go onto WhatsApp now and we can send a message or a photo or video or a voice note or whatever. And I'm very sure that soon it would be just as easy. You click on your friend's contact detail, whose address you've already got saved, and you send money via crypto like that. So I'd say where trust will come from, the user experience, that you feel safe and confident clicking on Bob, send crypto, much as we go to Amazon now and press buy now, product arrives the next day. And it doesn't have that sense of security yet. But I think that's coming.
Yeah, Elsa?
So, in building trust and credibility, I think the answer is different if you're talking about retail versus businesses. For retail, a retail user wants absolutely ease of access, wants protection of their assets, but they don't really care how. They're not, I mean, the average retail user isn't going to delve really deeply into, okay, if I use my Wise card, are my assets really segregated or whatever, as long as it's got a basic reputation. Also, the average crypto user may not be aware that in the fiat world, your banking deposits are only insured up to 100,000. So, there's that trust element of you kind of the retail user tends to trust the bigger institution, without needing too much due diligence. They need an incentive to switch. That's key across the board, whether you're talking about businesses or retail. What is the incentive to switch from fiat to crypto? Retail is not sensitive to percentage points for using a cash point, right? So they don't see the fees, the merchant fees that are being charged. They do see the FX fees. They do see the FX fees at their retail bank, and that's why the majority of people in this room probably use Wise. So that incentive to change, to move to crypto, to move to paying in crypto, is key for businesses. Reputational risk has been in the headlines all year. So you are now not just aware of your counterparty, but also of your vendors, of anything that could tarnish you with dealing with a non-reputable crypto firm, and also an incentive to switch. Right? Why is a business going to start moving some of their fiat transactions into crypto? That risk analysis needs to be made.
Yeah, thank you. So we wanted to finish with something that could be useful for everyone in the audience. So what is, and the question is for everyone, what is your advice for fintechs or payment companies looking to build crypto payment rails? What is the thing that you would highlight as start here?
Okay.
Shelley?
Yeah, so there's two sides to this is previously what happened before there were rules you could stick to was in particular VASPs would create an incredible user experience, no middle office, no back office, no ability to create reports, be audited, stuff on Google Sheets. So compliance by design, and it is the sad fact in the room is compliance is either you pay now or you pay later. So building stuff that's fit for purpose from the outset and anticipating how that's going to need to adapt, scale, grow in future. Yeah, to me, that feels like a key point. And ensuring that your stakeholders are aligned with that and share your view, because there's no point you being out there and clean and fabulous and everyone else is just like, yeah, we're going to hide behind you. Yeah. And so I'm going to hand it back on that one because I can see how short on time we
No,
are.
we can talk about these for hours. Elsa?
Sure. One of my favorite topics is counterparty due diligence, counterparty risk due diligence. So my last corporate role, I was working for the Chicago Mercantile Exchange. So very aware in the derivatives world of counterparty due diligence, something that up until 2023 was widely ignored in crypto world. I think post FTX, right? 134 entities behind FTX, owned by FTX, and named in the bankruptcy dealings. You have to do counterparty due diligence. It's going to become the law. And in order to do that, there are a number of tools that any business is going to need. The first piece of advice I would give is jurisdiction shopping. Right, we're still unfortunately in a time where we call it the sunrise issue, as jurisdictions are coming on board with regulation at different times and different speeds in different ways. Don't go to the cheapest, easiest jurisdiction. Pick a reputable jurisdiction. Figure out what your obligations are. Does this pull you into becoming a custodian or becoming a payments provider or whatever that jurisdiction dictates? And then understand, apply that risk-based approach. Come up with a strategy, a compliance strategy, and select your vendors carefully.
Yeah. Erica?
A couple of things. I mean, the lawyers always say that there might not be regulation here, but act as if you are regulated, and do as if everything as if one were. And practically one of the real benefits of crypto is by core, it's traceable. And you've got these fantastic crypto analytics tools, Chainalysis, Elliptic, there's numerous of them that can show exactly where transactions are coming from, where they're going to, what is what. Companies can use them, and I'd recommend using them and using a collection of those so that they've got exact knowledge of this is where funds are coming from, this is where they're going to, and why not share that? You've got this tool that's transparent. You use that, share that. The crypto companies that aren't trusted, or companies that are using crypto that aren't trusted, are the ones that say, oh, we've got XYZ, we'll prove it. And that they don't, or that they won't, because it's clearly something that's being hidden there, and resisting the urge to name certain stable coins. But you've got this fantastic ability to be totally transparent without giving away privacy details. So use the crypto analytics tools.
Thank you. So this was the topics we wanted to cover. So there's a few questions, and let's start covering the questions. So how are established banks reacting to growth of opportunity of the crypto payment sector?
We get, so at CMS, just jump into that, pretty much every week there's one of the big traditional banks going to us and basically going, can you teach us what crypto is? Can you explain what this is? Can you tell us what Bitcoin is? Can you tell us what NFTs are? And starting from scratch. So they're learning what these assets are, want to know what the risks are, and they're pretty much all in a position that we're seeing that they know they need to do something about this crypto thing. They don't necessarily know what, but they know they need to do something about this crypto thing. So in various stages of learning about this crypto thing and knowing they need to do something about this crypto thing. But one of the banks quite famously lost 20% of their clients almost overnight when they banned crypto, and so they're seeing that, and they're seeing the challenge, and they know they now need to do something. And also, you've got the realization you've got so many traditional companies, sports brands, retail brands, Formula One brands, clothing brands, whatever, that are doing something with this crypto thing. Maybe it's launching NFTs, maybe it's getting sponsorship from crypto companies, maybe it's using crypto as incentive payments, maybe it's loyalty points, maybe they're accepting crypto from customers, whatever it is. And the banks, traditional banks, are saying, well, we can't totally ban all of crypto because then we'd also lose all of our customers some way, and young people want it. And let's see PayPal, which started accepting crypto, and their transaction volume went up exponentially because people don't check your bank app for the fun of it. But if people have crypto, they check their crypto app. So there's a huge demand from traditional finance to get involved in some way. I think that they're just trying to see how to get involved in a less risky way.
Yeah.
Yeah, and there is a difference on the payment side. It is going to be deeper learning, but what we've observed on the institutional side is that institutions want to be able to have something in their portfolio that represents crypto. That's customer driven. That's not suddenly their risk officer grew a pair. It's the customers want it. And the way that they're trying to do that is almost renting the house next door but one. So they haven't bought the property. They want access through a trusted partner who does know what they're doing, and as part of diversification of their exotics and alternatives. And we're seeing 2023 is the year that this is all happening, because anyone who is watching our market over any period of time will probably, unless there's another flock of black swans out there, we pretty much hit the bottom in terms of the Bitcoin valuation. And if you're an asset manager and you can see that an asset's about to hit its upswing, you want in. But it takes time and it takes effort and it takes a lot of risk mitigation. So the easiest way in is those firms who are running funds of funds, the ETF platform, the ETP platforms. That's where the institutions are dipping their toes in the water, a little bit crypto curious, and let's see if they're going to join the party. Yeah.
Also, do you want to add anything?
Yeah, so that's great. I speak to a number of banks actually in the context of my current role, because they want access to our data. They want to know is Binance regulated in Cayman. We have data on 38,000 entities in terms of being regulated and not regulated and what they're regulated to do. So a case study for a bank, for example, I'm speaking to one bank who wants to facilitate crypto payments to platforms, to exchanges. So they want to allow their client to send money to Binance as long as that they're sending it to a regulated Binance entity. And they want to be able to know when a said client is trying to send that payment to a non-regulated entity and they want to block it. So that's an example of them utilizing our tools. Then we're speaking to tokenization teams about their counterparties. If they launch this token and they trade it on X number of counterparty platforms, are these platforms regulated? So the banks are very much reacting, sometimes blocking, sometimes facilitating, sometimes innovating.
Yeah, thank you. So the next question is, recent data shows growth of digital payments has been strong in emerging markets. How do you see this evolving over the next few years?
Yeah. I mean, why wouldn't you? Less friction, absolute traceability. Yeah, I'm in.
I have a friend in the audience from Venezuela. And in Venezuela, if you want to buy a house, you better have a Bitcoin wallet. It's at the point now where nobody wants your Bolivar. And if you want to purchase something in US dollars, you're going to have a US dollar bank account offshore. Good luck trying to get that money in. You're limited to $10,000 when you come in. So it's already happening. And in some of these, truly active markets, I think the dollar amount may not be there yet in terms of the global volumes, but when you have 25 emerging markets banding together that are starting to actively use something, and the de-dollarization starting to happen in the Far East, things are moving quickly.
And that use case as well for the traceability of payments, and it's beautiful. You're seeing aid agencies who've always struggled with supply chain integrity end to end in the money train. And having it on the blockchain, you know exactly which wallets stuff has ended up in, and allowing that auditability of where funds are supposed to go, have they really gone? Awesome.
And there's so much that crypto allows. I mean, I think it's fair to say Central London is not a good example for why the world needs a different form of money. We go through life here and we buy things by clicking buy now on Amazon or tapping things with one's iPhone. And it's easy, and we're sort of removed from that. And exactly that, travel around South America and get mugged. What's the alternative? Or you rely on, I mean, if you lose your cards or access to payment, your options are where you go to Western Union, they'll charge you 14% and you wait days and get given cash, which is going to be stolen, or an alternative, or rely on hyperinflation. And the best uses of crypto, I would argue, are not people buying whatever joke coin for it to go up or down in price. It's places like the UN is using crypto to give out in micro amounts. It's for paying remittances, or paying in things on a per use basis for content creators. My favorite project, Plastic Bank, they're paying people, I mean, in numerous countries. Just one example, plastic waste is worthless and it's just thrown around and litters the environment and litters the ocean. And there's been numerous attempts to pay people to pick up the waste plastic, and they were giving them cash, which is useless because it was invariably women going to pick up the waste plastic, and then they'd go and swap it for cash, and then there'd be a queue of guys basically waiting to mug the women and steal the cash. And cash is not the answer in many circumstances. And they just developed a way everybody can get a smartphone, and they all you need in crypto is a digital wallet, access to a smartphone, access to the internet. You can have a digital wallet, and then suddenly you can be paid money safely. So you can get money, you can save it digitally, you can get a loan, you can get a mortgage, you can spend it, you can say it opens up so many opportunities to like 2.5 billion people that don't have access to a bank account. So yeah, for us, I can just buy things by tapping an iPhone. not the best example, but people are seeing that governments are encroaching, that, you know, that privacy laws are being eroded. So
And I think it's interesting because it was a debate for a while amongst regulatory circles as to whether or not unhosted wallets should be regulated. And it was decided not, largely because of the potential for financial inclusion. You know, the once you start regulating unhosted wallets, then how are you going to give the unbanked access to an unhosted wallet
Yeah.
to make up for the fact that they don't have an ID card or whatever else? So it was specifically decided not to regulate for the time being, you know, for financial inclusion reasons.
So I'm going to pick the last question, I think, looking at time. That would be interesting for everyone to know. So the question is, from your experience, what countries or regulatory authorities provide a reliable level of regulation? So we know there's a few countries, obviously, only. And is in your opinion, is there anyone that you would pick as reliable? Because previously, we touched this point about picking the right countries and not picking the ones that have less strong frameworks.
Yeah, and in terms of substance, Singapore is way out there. The rest, it's still a little unproven. But I would say that despite it being unproven, going for a jurisdiction that is a high bar attainment, credible jurisdiction is the way to go. You know, people ask compliance people all the time, oh, I'm sure you want a light touch jurisdiction. No, we prefer certainty. And if this is the strictest of jurisdictions, you know, if you make the bar here, that your institutions and your informed customers are also going to say, that's what a hallmark of quality looks like. That's what we're going to go for. But yeah, Dubai and Abu Dhabi, Gibraltar, surprisingly
yeah.
enough. Way up there, not in terms of enforcement, but the framework rocks.
So I have to chime in. So the company that I work for, X-Ray Consulting, who owns VaspNet, was created by a Gibraltar legend called Sean Jones, who
Right.
wrote the crypto regulation
Yeah.
from scratch. And that's a key point right there, is that, you know, she decided to start from the beginning as opposed to take existing regulation and tweak it. And that's the first thing you have to look at is has this jurisdiction actually created crypto regulation, or are they trying to squeeze in, you know, a square peg into a round hole of existing regulation, which is usually not the way to go.
Erica,
yeah,
do you want to add?
Switzerland is getting increasingly popular. Seeing lots of companies move there. In England and the UK is getting increasingly unpopular because of the lack of clarity. What I hear from the lawyers, I'm not an expert in it, but it's totally a question of case by case. And colleagues at CMS just spent about a year, I think, doing a whole sort of jurisdictional survey, and it's a big thick thing. So if anybody wants that, please email me and I can email it out. And that gives pros and cons of each country based on different circumstances. But
I think we have time for a final one.
okay.
Which of you in the panel have active investments in cryptocurrencies?
I've made and lost so much money over the last 5 years. I shouldn't be here. I should be retired.
Tried, cashed out at the wrong time, lost, and now my stress levels couldn't handle it. I see, you know, you see people doing incredibly well, and you know, kudos to them. And then I get, because of the book, every day emails going, oh, I lost all this money, or I lost this money to a scam and whatever. I could just totally not handle the stress levels.
So yeah, came into the market these 21 years ago, so 3 years ago. Of course, made a fortune, had no idea what I was doing, and then took an enormous haircut. And if you're going to work in compliance in this space, you need to go through that. Okay, that's my story and I'm sticking to it. But no, it can develop empathy. Getting stuff right all the time may not be the best way to learn. So, especially when it's your own money and you're going to develop a different view when stuff has gone wrong rather than just when it's in theory and it's gone right.
So I got burned in an instance of market manipulation, and I've been in the markets for a long time on trading floors. There was no excuse. It was shameless of me to not have looked at the central limit order book or not have. So I got absolutely creamed.
But that happens.
But
all
I
the time,
spoke,
market
yeah, but I
manipulation.
spoke to, I was speaking to we'll say a top 5 hedge fund trader here in London, and they have an active Bitcoin desk. And he said, it's amazing. We can do all the things that we're not allowed to do in traditional markets, all the bad
Yes.
behavior. And you've got to be aware that if you're trading in a shitcoin, pardon my French, you probably have a professional trader on the other side of that trade who has tactics you haven't even dreamt of. So, yes, you can be smart, but you can't just play. You actually have to have a decent strategy, thinking,
And they
2
will
steps
have their own
ahead.
AI and
Yeah, 2
software
steps
working
ahead that
against
some
them.
of the smartest
Yeah.
brains in trading are, of course, making money out of this,
But
and they're probably on your side.
on a last note, what I would suggest if anyone hasn't got or played with crypto, get a wallet, buy 10
Yes,
quid worth,
100%.
play.
Yeah.
Like, don't do it for that. Just play.
And go through the process.
Yeah.
Can we have a show of hands to see who here has invested in any kind of crypto? Yay!
Yay. Thank you so much. It was absolutely amazing.
Cool.
A pleasure to have you. There's a question?
Great.
Thank you.
Thank you.